Welcome to The Explainer, where we break down the big topics using the data. And today, we are diving straight into a real puzzle at the very heart of the U.S. economy. Is the American consumer actually doing okay, or are they secretly running on fumes?
You see, we've got this major contradiction going on. If you just look at the headlines, it looks like people are spending more money than ever. But if you dig just a little bit deeper, the warning signs are really starting to flash.
So, what's really going on here? Has the consumer finally hit their limit? And what could that mean for the entire economy? Okay, let's dive in and find out.
All right, first things first. Before we get into the weeds, we have to understand why this matters so much. And it's because to really get a handle on the U.S. economy, you first have to understand the incredible power of one single person. You, the consumer. Check this out, 68%. I mean, just let that number sink in for a second. That is the huge slice of the entire U.S. economy that is driven directly by people like you and me buying stuff. It's not just part of the economy, it is the economy.
So you can see why economists are absolutely glued to these numbers. If that engine starts to sputter, the whole train can go off the rails. And that's exactly why the warning signs we're seeing in the data today are so important to understand.
Okay, so let's pull back the curtain and get into the actual numbers. The latest report on retail sales, it looks pretty solid on the surface, but there is a huge catch buried in there that honestly changes the entire story.
So here's the number that everyone sees, the one that makes all the headlines. It shows that spending grew by almost 4%. And hey, that sounds pretty healthy, right? More spending, stronger economy, case closed. Not so fast.
This is it. This is the question you have to ask about pretty much any economic number these days. It's how you separate what's actually happening from all the noise created by rising prices.
You know, think about it like this. If your grocery bill goes up by 4%, but you bought the exact same food as last year, did you actually buy more? No, you're just paying more to stand still. That's the difference between nominal and real growth.
And boom, here's the reality check. Once you strip out inflation, that nearly 4% growth it shrivels to just over 1%. That's not a sign of a booming consumer. That's a sign of a consumer who's barely treading water.
Now this is where it gets a little spooky for economists. A sustained drop in real spending, adjusted for inflation, isn't just a random blip. It's a classic warning sign. We've seen this movie before, and in the last few decades, it has almost always ended with a recession. Okay, so we've looked at the hard numbers, what people are actually doing, but what they're thinking, how they're feeling about the economy, that can be an equally powerful clue about what's coming next. And let me tell you, the mood is not great. This chart here is from the University of Michigan survey. It's a really big deal, widely followed, and it just took a massive nosedive. Historically, drops this sharp and this fast are another one of those flashing red lights that you often see right before the economy turns down.
And the report itself spells out exactly why. It says people's plans to buy big things, cars, refrigerators, furniture, they plunged. Why? Because people are just balking at the high prices. Economists have a name for this. It's called demand destruction. It's basically people throwing their hands up and saying, nope, I'm out. I'm not paying that.
Okay, but hold on. Before we take this all as gospel, we need to be smart about the data. While that overall trend in how people feel is pretty telling, some of the specific details inside this survey have gotten, well, let's just say a bit weird lately. You see, a few years back, the folks who run this survey completely changed how they collect the information. They used to call people on the phone, but now they do it over the internet. And that one little change, it actually made the results way more jumpy and volatile. And this is where things get really fascinating and, frankly, a bit messy. It turns out that how you feel about inflation might just depend on your politics. If a Democrat is in the White House, Republicans are way more worried about inflation. When a Republican is in charge, the fears flip like a pancake. It tells us this part of the data has become more of a political poll than a pure economic indicator.
So, spending is weaker than it looks, and people are feeling pretty pessimistic. To really get the full picture, we have to zoom out. We need to look at the very bedrock of the economy, not just what we buy, but what we, as a country, actually make.
Wow, I mean, just look at this comparison. The growth in America's industrial engine today is just a tiny fraction of what it was back in the country's economic golden age. It's not even in the same league.
And if you trace it over time, the story is crystal clear. We had this strong, steady growth in production that just fell off a cliff right around the turn of the millennium. Then, after 2007, it basically flatlined. It never really got its mojo back.
And here's why that matters so much. This isn't just some recent blip.
It's a deep structural problem that's been building for decades. When you don't make as much stuff, you have fewer high-paying jobs, and the entire economy just becomes less stable and a lot more fragile.
Okay, we've looked at spending, we've looked at how people are feeling, we've even looked at the industrial foundation of the whole country. So let's put it all together. What is the final pulse check? What's the verdict on the U.S. consumer?
Here's the bottom line. The verdict is in. The U.S. consumer is strained, seriously strained. Real spending is trending down. That's a classic recession signal. How people feel about the economy has absolutely plunged. High prices are causing clear demand destruction. And all of this is sitting on top of a very shaky foundation of weak industrial production.
When you put all these different pieces of the puzzle together, it really changes how you see those optimistic headlines, doesn't it? The warning lights are blinking red all over the dashboard, and that leaves us with one very big and very urgent question for the months ahead.